Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. We love talking about the banks simply because they're so big and so important to the Australian economy. But the world is changing, mostly because of technology. There are more challenges to the traditional banks, branches are closing and the industry is evolving. EY recently released the Global Next Wave Consumer Banking Service, which looks at the relationship between consumers and banks and where the sector is heading. Tim Dring is the Oceania Banking and Capital Markets Leader at EY. Tim, welcome back to Fear and Greed and Happy New Year.
Great. Same to you, Sean, and glad to be with you.
Overall, the vast majority of Australians still have a primary financial relationship with a traditional bank. Is that right?
That's correct. I mean, that's still the dominant feature of not only our market, but also the global market as well, Sean. But, our surveys indicated that is changing.
Okay. So when you talk about it's changing, is it let's define neobanks first, and then I want to get on to Apple Pay and those sorts of products as well. Sure. So is that where people are going, albeit at low numbers, and will continue to go?
Yeah, it's a good segue into, let's define what the neobank is in our survey context. So we surveyed 12,000 customers globally across 14 different markets, and a lot of those were from developed economies and developing economies. The term neobank, though, that we're using is not necessarily an entity with a banking license like perhaps a traditional bank that's offering deposits and mortgages, but one that's offering, I'll call it, broader financial services or fintechs, in particularly payments, perhaps in contrast to, traditional banks. So, that's how we have defined the neobanks, but that shape of, that market has changed significantly from the last time we did the survey. And, globally now we've got 27% globally surveyed have a relationship with a neobank.
Right.
Now that's significantly up on prior years, almost double, but that's higher than certainly the Australian context where it's about 10%.
So are we talking about things like buy now, pay later groups?
Yeah, buy now, pay later, payment engines, all of those sorts of fintechs playing in that, predominantly that payment ecosystem, and also some of the newer banks that have, certainly hit our Australian marketplace that have, banking licenses and restricted banking licenses as well.
Okay. Now, for a very short part of my career, I worked as a fund manager, and I remember what really hit me was people would come in and trust you with millions of dollars to invest their money, at least the team I was working in.
Yep.
That trust thing, it amazed me that someone would trust this group of people I was working with to invest $20 million, for example. You can kind of laugh about it, but at the end of the day, trust has to be the most important part in this financial relationship.
Absolutely, and that came out very strongly from our survey as well. In fact, the traditional banks rank far higher on the trust equation than the neos at this point in time. But I think that is changing. And it's interesting when we looked at, the top reasons for trusting as their, primary financial relationship provider, confidence in data was number one. And that is certainly true for traditional banks. So the view is the consumers felt that traditional banks protect their data perhaps more so than fintechs. And whilst it was in the top five for fintechs and neos, it just wasn't number one. But what was number one on the trust equation for neos was that they respect the customer perhaps more than what a traditional bank did.
Okay, so do you think if that's the case, are the banks moving down the path quickly enough to actually provide services that customers want, which is kind of what the neobanks are pretty good at?
It's exactly right. And perhaps, this is an opportunity, I think, for traditional banks. They've got that sort of, I'll call it that advantage of incumbency, that advantage of tenure, and trust is, I think, a function of both of those. But then the next level is, consumers are wanting more. They're wanting more, and we've sort of defined it as super apps, so integrated offerings, if you like, and tailored offerings to their customers. And that is where I think, neobanks and, fintechs more broadly have probably got the jump at this point in time on traditional banks. So consumers are after more. And that was not only through, I'll call it, your lower age demographics, which typically might be more associated with neobanks, but that also played out right across the market. But certainly, that younger cohort millennials and so forth, that was probably the strongest signal.
Stay with me, Tim. We'll be back in a minute. My guest today is Tim Dring, Oceania Banking and Capital Markets Leader at EY. So do you think the banks are doing enough around technology? I mean, Commonwealth Bank arguably is doing most of the big four, though that's probably debatable. But if we take them as an example, they're certainly trying to get into that buy now, pay later space. Around apps, they've done a lot of work. Is it the incumbency issue actually has its drawbacks as well? They can't do enough?
Look, I think they probably can't do enough in the space of time that they have. And I think most of them do have legacy systems that constrains their ability to move quickly and be nimble in their offerings. So I think they're trying to do as much as they can with trying to operate within the constraints that they have. But it's fair to say, from what our survey has indicated, that pace of change, they've just got to accelerate their investment in this space. Whether they do it alone, Sean, whether they partner with others. And the other thing that came out through our survey too, and this has been reasonably consistent, is that perhaps bigger tech companies are also more trusted than banks as well.
Right.
So in offering services, in tailoring their services and customisation. So perhaps the speed to market could be accelerated through alliances with some of those larger tech companies.
So if you take Westpac, they've been quite happy to white label products. It's a bit of a different take on strategy compared to the other three. Is that the sort of thing that you expect to see more of?
Yeah, that's exactly right. And, speed to market's important, product development is important, and and we have seen, banks acquire other neobanks, traditional banks acquire neobanks for that very reason, Sean, because there is a speed to market that's imperative. There's new technology that's being built out so they can get to market faster and deliver tailored propositions to their customers in a better way than perhaps the incumbent banks are doing at the moment.
So do you think the days of having one bank are over?
Yeah, that is right to some extent, and we have seen through this survey, and whilst traditional banks still have a larger share of products per customers than neos, the neos aren't too far behind. So therefore, I think that's demonstrating that, customers are happy to have a relationship with a number of organisations. And in particular, where we've seen, globally now that, 27% of customers have had a relationship or have an account with a neobank. That's nearly a third of the customers surveyed. So it's starting to become quite significant. And perhaps there's a couple of things that have driven that, Sean. I think there's no doubt through the pandemic, with the move to online shopping and move away from sort of bricks and mortar transactions, we have seen the rise and take up of some of those products in a faster fashion than perhaps we would have without the pandemic.
And do you think regulation is keeping up? Open banking was certainly touted as a game changer. It probably has to some extent, though I'm not quite sure how dramatic that's been in the real world. What do you think about regulation and open banking?
Look, I think open banking, there's no doubt that it has taken some time to get to our market, and it's still, I think, early days. We have seen other markets where it has played out faster, particularly in the UK. And I think a lot of our banks perhaps saw it as a compliance exercise, Sean, to begin with. And no doubt it was a big compliance exercise in actually just getting ready to provide customer data, but, through the consumer data right. But I think it is quickly turning their attention now to actually how do we turn this into a strategic element? How do we leverage relationships? How do we develop broader ecosystems? How do we share data with neos? How do we partner with neos as well? Because payments, if I look at Asia, 95% of the consumers surveyed through mainland China transact their payments digitally. That's significant for an emerging company. Yet only 56% of them transact with their institution through deposit accounts. So the rise of payments, I think, has been exponential in the last few years. And that's where I think as the majors and regionals start to pivot more towards some of those services, open banking is going to be critical.
Do we care about branches anymore?
Really good question. I think through the pandemic we've seen perhaps we're not as reliant on branches as we once were, but they still play a feature. And that trust importance that I highlighted earlier, that dominating feature of traditional banks, branches are still very important. Perhaps maybe less so in Australia relative to other countries, but certainly in parts of Asia, the branch network is still very important. And on that, those trust metrics that I touched on, actually the second highest reason for trust, even in Australia, was to have a branch nearby so you can reach them when you want. Now, clearly for a neobank, that's not even on the radar, but it's still very much up there for consumers. And I think it's less about now perhaps acquiring services, but it's more so the assistance and the fallback position should a consumer need to reach out to their bank in a more tangible manner.
The world has changed enormously in the last 5 years, Tim, in the banking landscape. I mean, buy now, pay later is the obvious one. But 2 or 3 years ago, we were talking a lot about the banks and the trust equation with customers. Westpac certainly paid a massive fine over anti-money laundering. I don't think there was anyone meaning to do anything wrong in that instance, but, processes fell down. The Banking Royal Commission hit all the banks to some extent, including AMP. Has that all passed us, do you think? Do you think the banks have recovered from that shock?
Look, I think it was a defining point for them. And, they've paid out billions of dollars in compensation and remediation payments to customers, whether it be through offset accounts not working or wealth products, etc. So that has gone a long way to restore trust, I think. Globally, the trust equation is very important right across all markets. And not every market in the world, Sean, has been through a Royal Commission like we have.
Yeah.
It's still very high up there globally, 83% globally. So Australia is actually at 72% for traditional banks, still behind the trust equation. And perhaps prior to the Royal Commission, that number would have been less. But I think the way the banks, particularly the traditional banks, have dealt with consumers through the pandemic, the hardship provisions that have been offered, the deferrals, I think all of those things have really gone a long way to restoring trust in the marketplace, and perhaps trying to leave some of those, some of those legacy issues that did burden them through the Royal Commission behind them. And a lot of that was through their wealth businesses, which they've all pretty much now divested of.
So looking into the crystal ball over the next couple of years, what do you think it looks like for banks and for neobanks?
Look, I think neobanks are going to gain even more and more market share. They're going to offer more and more products, and say neobanks in the stricter sense that those that actually have a banking license. They're now starting to look at the other side of the balance sheet, not just deposits but loans. I think we'll see traditional banks start to diversify as well, build out broader relationships, particularly with fintechs. That's going to be really important. And you touched on white labelling, and that's going to be key. Continual investment in technology, whether that is partnering with some bigger tech players, I think that's a possibility, or alternatively, some of those tech players moving into the banking space. So there's a lot going on. There's no doubt that the market is still very competitive. It's still a low interest rate environment. We've obviously got some threats of rates rising, but margins are tight, and competition, I think, is certainly for deposit products and in particular for mortgage products has never been more intense.
Tim, thank you for talking to Fear and Greed.
Great to be with you again, Sean. Thanks.
That was Tim Dring, Oceania Banking and Capital Markets Leader at EY. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.